Hey, hope you had a great 4th of July and a nice holiday weekend. We are going to be covering jobs, inflation, and a great question of the week around considerations if consumer behavior does actually end up changing. My name is Brandon Steele, financial advisor with Mainsail Financial Group here at Bellevue. And our goal every Thursday at 3 is to bring to you the market news, the data, the trends that we're watching, hopefully weed out a bit of the noise along the way. And again, this week, we're really going to focus on jobs and inflation before we get to our question. And let's start with jobs. So last Friday, we had non-farm payrolls come out. And what we saw was that we had added 206,000 jobs for the month of June. So the reason I wanted to highlight this is obviously jobs are a big focus now as we look at what the Fed does next. And you may remember from last week, we covered the ADP employment report. This number on Friday was quite different, yet again, than the sign the ADP report had suggested earlier last week. And for those who are familiar and kind of caught last month's update in the same vein, this is exactly what we saw last month as well, where the ADP employment report came out on Wednesday for May's numbers and basically suggested that we did not add very many jobs at all. And then Friday, we got the non-farm payrolls number and suggested that we had a very hot labor market. Now, this was not quite as high of a number as last month for Friday's data, but the same theme kind of continues. And the reason this is important is because obviously, number one, maybe to highlight that as you are looking at jobs data moving forward, take the ADP employment with a bit of a grain of salt. I know I've said that countless times, but it is important. The non-farm payrolls one is probably the one to take a little more seriously. But also watch what happens as we get revisions, because these numbers come out, but they are never perfect. And so what has been happening over the course of especially 2024 is even after these numbers come out, there's revisions that come out later. And most of those so far in 2024 have been revised down. So we will see where revisions take us from here. But nonetheless, a little bit of conflicting data on the labor market side of things, and certainly translates to what we may see in the Fed. And on top of that, we had inflation data to talk about and how that translates to Fed speak. So we had so this was CPI data that we had today, Thursday. And we had core CPI come out up 0.1%. And the headline number was actually down 0.1%. So overall, to be honest with you, it's good signs here, right? And I think with some of the money supply that we've been talking about in terms of how that's been coming down over late last year into this year, maybe some signs that we're starting to see some of those ripple effects into the inflation numbers. However, please do keep in mind this still puts our annual inflation over 3%. Right? The Fed's target is supposed to be 2, although they're maybe moving that needle a little bit. But nonetheless, we're still over 3% on an annualized basis. And most of this month's pullback or slower inflation is due to energy costs and due to the used car market. So, take this again with a bit of a grain of salt as well, because until we see a little bit more broad inflation numbers reduce, I think that it's hard to point at 1 month or 2 months data points and say, yeah, inflation is officially coming down, especially when energy has such a big role in this on the headline number, because energy really had a big role in what we saw here for the month of June's inflation data. So coming up next week, this all kind of relates to obviously Fed talk. And next week, so tomorrow we have producer price index, so more inflation numbers. We also have retail sales, and we have Powell talking as well. So this will kind of give us a good starting point before we hear some of Powell's comments. And the retail sales number will be very interesting to watch next week, which will tie very well into our question of the week. So Blain, thank you so much for sending this in. Apologize for the slight delay in getting to it, but basically, Blain's question is potential investment considerations if there are changes in consumer behavior ahead. And I really appreciate this question because over the last few weeks, we've been talking about watching the consumer and potential cracks in how the consumer is spending and how they're handling cash flow, so to speak, right? The strength of the consumer. So really good question. And please do know that as I share this, different economies are going to provide different opportunities. So if we start to see that, and depending on where we're at in the actual cycle, might dictate some strategies more specifically of what we look at. But on a high level, what I'll share is that when consumer behavior does start to shift and we start to see spending decrease, the key component to investing around that type of environment is safety, right? We really want to make sure that we are avoiding, highly leveraged companies, avoiding a lot of the speculation, which, has been kind of the some of the upside that we've seen over the last, year or so. And those things can work really well when things are going great. But when things shift and the consumer stops spending, those are the areas that get hit really hard. So again, safety is maybe the theme. On the flip side, to what actually look for are generally companies with really strong history of earnings and beating earnings as much as possible. Companies with really strong financials, strong balance sheets, and quite honestly, a lot of times, some of the more boring things like utilities, consumer staples are, maybe something to highlight as well. And the reason those are important is because they're needed regardless of where the economy is, right? If the consumer stops spending, they can't just give up their utilities bill or the food that they need to put on the table. What they typically give up is going to be some of the extras in life, whether that be, luxury goods, whether that be some of the services that, have really run things over the past 18 months or so. Those are the things to watch for, right? Maybe we travel less, we go out to eat less, those types of things, right? So again, safety, certainly utilities, consumer staples, things that we need regardless of what's going on in the market cycle are the things to kind of consider in those types of environments. So thanks again, Blaine, for the question. I think it was really good and very timely given what we've been focusing on the last couple of weeks here. Hopefully that was helpful for everybody, and be sure to tune in next week. Again, we'll be covering producer price index data from tomorrow, as well as Fed Chair Powell's speak and what he shares in his conference, and retail sales coming up next week as well. Have a great upcoming weekend. We'll see you next Thursday at 3.